Morning, guys. Happy Friday. It's October 24th, 5:27 a.m. Central Time. Welcome back to Grain Markets and Other Stuff. This is the best grain market show on the planet. Matt Bennett is here this morning. Mackenzie is also here. Guys, let's start off with yesterday's price action in the grain markets.
So soybean and corn futures advanced yesterday. The November 25 soybean contract rose 10 cents, settling at roughly 10.45 per bushel, its highest level in more than a month. Futures were supported by a surge in oil prices, along with increased optimism over a potential U.S.-China trade deal. They were also fueled by strong demand from other international buyers besides China and robust domestic crushing activity. The December 25 corn contract also increased, gaining 5 cents to settle at 4.28 per bushel. The gains were driven by strong export demand and firmer basis bids amid uncertainty about the size of the crop and limited farmer selling.
Matthew, rumors circulated yesterday regarding Chinese purchases of U.S. soybeans and also U.S. wheat. And I heard these things reported in different places. Does that make any sense to you? Is it possible despite the tariffs and the trade war?
We'd seen that those rumors were kind of floating around, and then, we heard that there was a Chinese fund, a hedge fund that was actually involved in that, supposedly, that were long soybeans, believe it or not. So I don't know that there's anything to it. It would make some sense that they would be in buying beans. And why is that? Because reporting's not going on, and that's when they like doing things. And so, I'm not trying to be too hard on them. It's just that, they love to fly under the radar, and what a great time to step in and buy a bunch of soybeans whenever nobody knows that they're actually doing it. So it would make sense that they are. I just don't know that we've seen a lot of it. I mean, this week's inspections, I know you talked about this week. I mean, they were fantastic for soybeans. And so if they are not in, I mean, clearly we've got other business going on, which, is not like it's usually been in the past in the fall time frame, but it's certainly awfully good if China's non-existent. But yeah, I don't know that they're in doing anything. I think a lot of what's going on with the optimism of just, trade talks coming up. I mean, they're going to sit down and talk, and people feel like there's got to be something in the works if they're actually going to go ahead and talk. Because I don't know that Trump's going to waste his time with it if he doesn't feel like they've already got something pretty decent in place.
If China did buy beans, it would make sense. I was looking at Reuters global pricing data this morning. U.S. beans out of the Gulf are 64 cents cheaper than what Brazil can offer. So it would make sense from an economic standpoint. And the tariffs on soybeans, of course, are imposed by China. Trump doesn't impose tariffs on soybeans. China imposes tariffs on soybeans on its own buyers. And if they need the beans, they'll waive the tariffs. Let's take this opportunity to look at some charts. So here's November beans. You're kind of creeping up to the upper end of this wedge pattern. What does it take to get out of this range, Matt?
Well, I mean, what it's going to take, in my opinion, is some sort of a deal. I mean, you're going to have a trade deal that's got some teeth in it, first of all. Second of all, in all honesty, if we still flip-flop around here and we don't have anything, the other thing that could break us out at some point, it's going to take a little while because we're not there yet from a weather perspective. But if Brazil would end up having some weather problems, there's no doubt. Because obviously, world supplies, they're ample. I wouldn't say they're overly burdensome, but they're ample. But that's after Brazil just raised a massive crop last year. And so, I think that if you get into an issue there and the world doesn't feel that, hey, Brazil's just going to raise a gigantic crop every year, if there's some doubt there, in my opinion, that could be the other thing that could break us out of this pattern.
Big picture, you peel it back and look at a weekly. We have not been above 1080 spot month futures in 14 months. It was August of last year that we bottomed, and we've kind of been stuck in this range from 936 to 1080 on the board for spot futures for a long time. So it's been a very quiet market. Let's look at D's corn. That 431 peak from September was kind of a big deal, and we haven't been able to break out above that. You still got that open gap on the chart that I think is in July. It was from July, and it's like 433 or so to fill that gap. What's it going to take to break out above that level?
Yeah, in all honesty, I don't know that you do it based on old crop situation, Joe. I mean, you could take this yield down substantially. My problem with that you and I have talked about before is that we've overinflated our demand as far as feed usage goes. I just don't think it's there. That's something that they'll be able to take the wind out of the sails. So I don't think you do it based on this crop, even if you drop yield substantially. I mean, I saw some pretty low numbers. There was a Farm Journal deal this week that said 168 to 178. I don't know that I'm that low, just yet. I definitely feel like there's some areas of the Corn Belt that there's some very disappointed growers. I think if you're going to really get this thing ramped up, it's one of a couple of different things. A focus on 26 and trying to figure out, hey, is the grower going to go ahead and plant 95 million acres or more corn? I think it's still a possibility,
Yes.
just simply due to the fact that there's nothing looks good, and the grower likes to plant corn. But in all honesty, I think that you get a trade deal with China on soybeans and run the price of Nov 26 beans up substantially. Maybe you take well over $11 for Nov 26. Now you've got some alternative, for some of these growers that are cash strapped that say, well, shoot, maybe I should just go ahead and plant beans. So believe it or not, I'm not so sure that the trade deal, even though material, you're probably not looking at much in the way of corn exports, in my opinion, at this stage of the game. I think if you take the price of soybeans substantially higher, that's going to be nothing but supportive for corn. So, in my opinion, that's what it's going to take.
Perhaps more interesting than the flat price action in corn is the strength and the spreads. This is a pretty phenomenal move that Decent March went from an 18, 19 cent carry to almost as narrow as 12 cents yesterday.
Yeah.
Given the fact that we're in the process of harvesting 90 million acres of corn in the United States, and that we think we don't know anything about the yields, but we think they're decent. This spread is very intriguing.
It is very intriguing. So you got to ask yourself, why are they pushing so hard, to get a hold of bushels in certain instances? And so I talked about this on Wednesday with Kenzie on your premium content. That there's people that have bagged a lot of corn this year. I mean, there's corn and soybeans that's gone in bags. And a guy emailed me afterwards that was listening and said that he was looking for a bagger this year going into harvest, couldn't find one in North America. And so, what does that tell you? A lot of these guys were looking at the carry in the market for both corn and beans and saying, well, shoot, if they don't want any more than what they do during the middle of harvest, I'm going to go ahead and sock it away somewhere for a later date. And so, I do think that it's not just a function of this crop isn't as big as what we thought. I think it's a function of there's a whole lot of corn and soybeans that have found a home they don't typically find. And so, some of these processors, especially once you get towards the end of harvest, I mean, you and I talked a little bit over the weekend about free DB for beans out until September. I believe that program is pretty much gone away. It's just reportedly, but regardless, they were trying to source beans, trying to get ownership in any way that they could. And that's what you've seen as harvest has wound down in some areas, is that, they didn't feel like they got the origination that they were looking for. And so I think a lot of it's just due to these growers are trying to figure out a way to find somewhere to put this stuff.
One more chart. Let's look at Kansas City wheat. There was a positive action yesterday, and some of the rumors that were discussed involved China and U.S. wheat. This little trend line comes in at $5, which is an important level today. One, because it's just a psychological big round number, and also you've got a trend line. The wheat market's been down and out for a long time, Matt. I mean, some sort of little rally or bounce would not be crazy here at all.
No, it wouldn't be crazy at all. And I'm not so sure that maybe China wouldn't be interested as well. Like we talked before, I mean, they could fly under the radar here, but, you're hearing a lot of talk right now about harvest weather in China is just atrocious. And so, there are some issues on whether they're going to be able to harvest the quality that they'd like to see. And so, they may be trying to source some other sources of protein in other areas that they can do so fairly cheaply. I mean, our wheat is not super expensive, obviously. And so, we're not terribly competitive, but we're in pretty good shape. I think that they could step in and buy some U.S. wheat here. But yeah, anything to show a pulse in this wheat market would sure be nice to see.
Okay, let's go to the U.S.-China meeting.
So President Trump and Chinese President Xi Jinping are set to meet on Thursday of next week on the sidelines of the Asia-Pacific Economic Cooperation Summit in South Korea. The meeting follows a recent escalation in trade tensions, with Trump threatening to impose an additional 100% tariff on Chinese imports after Beijing announced new export restrictions on rare earth minerals. China's potential resumption of U.S. soybean purchases is expected to be a key topic of discussion when the two leaders meet.
So there's really two big meetings, because Scott Bessent is going to meet with these guys in Malaysia beginning today. It's going to be Friday, Saturday, Sunday, and then you got Trump and Xi next week. So if I had to guess, I mean, if I had to put money on it, why did soybeans rally yesterday? It's more so because of optimism, because of this meeting, and maybe not so much because of purchases. I don't know. I mean, we won't know until USDA reopens, I guess. But I think there's some optimism about this.
No, I think that there's certainly optimism. And again, I feel like there's probably some sort of framework already in place as to what they'd like to see happen once they're able to sit down and talk. Who knows? But I mean, I think we're all being idealistic if we think that there already hasn't been significant
Yeah.
talks already, taking place on what is it going to take to try to get both sides, to be somewhat satisfied. I mean, obviously they both had their heels dug in, but whenever you're actually going to be face to face, I think that that's what the market's excited about. As you suggested, it's not just this talk with the two of these guys. And quite frankly, I think it's got a whole lot more to do with just Xi and Trump. I mean, obviously, he's got people on his staff that, I mean, some of them need to learn how to make truth social posts and tweets, but they know a lot about trade.
Yeah. Okay. Let's go to crude oil.
U.S. sanctions may curb Chinese oil imports from Russia. On Thursday, the Trump administration blacklisted 2 Russian oil companies in an effort to curb funding for Russia's war in Ukraine. About 20% of China's crude imports, so about roughly 2 million barrels per day, are supplied by Russia. Companies that continue to do business with these firms face potential secondary penalties, including loss of access to Western banking systems and global oil markets. The announcement drove oil prices higher, with WTI crude rising about 5.6% to settle at $61.75 per barrel.
So we picked up 3.3% of crude yesterday and 2.2 on Wednesday. That's a big 2-day move. To peel it back a little bit and look at a weekly chart, crude is still very, very weak. Although I did, and I hadn't looked at a Bloomberg Commodity Index chart in a while. Look at this thing. We are right up against the extreme upper end of a long-term range in this basket of commodities. And what's been leading it, it's really like precious metals, like your gold and silver market, have been off to the races. You can throw livestock in there. Energies and grains have not really had much to do with the rally, but commodities as a whole acting slightly better here.
Yeah, I mean, I think that it's due to, there's just so much uncertainty, and a lot of people like to own commodities whenever you've got uncertainty. And so, I think that the sanctions certainly have, I guess, had some sort of effect. I mean, whenever you talk about India backing off of Russia oil as well, I mean, these things actually could give us some sort of a boost here. And, whenever we're growing energy, it's certainly not going to be negative towards the corn and soybean markets. I don't know that we can totally discount that had something to do with a little bit of enthusiasm in corn and beans here yesterday as well. So definitely oil going up is not something that's typically going to hurt the markets.
The Fed is going to ease. We talked about this with Jim Urio in a video last week, and we went into detail, but that is something that could be supportive to commodities as well. If the trade thinks we've got some more easy money policies coming, lower interest rates, that sort of thing, it's inflationary to some degree, and maybe commodities are something that benefit from that.
The U.S. will significantly boost imports of Argentine beef, with the Trump administration planning to raise the tariff quota to 80,000 metric tons, or about 176 million pounds, 4 times the current level. The move is part of the administration's effort to lower beef prices. However, the plan has drawn fierce criticism from the cattle industry, which argues that it will hurt domestic producers and threaten U.S. food security. With U.S. beef consumption estimated at 28.6 billion pounds this year, the additional imports will make up just 0.8% of total consumption, too small of an amount to have a meaningful impact on prices. On average, the U.S. imports well over 5 billion pounds of beef annually.
Just to be clear about what this is, and then I'll let you guys discuss, the United States government or Donald Trump, they're not the ones importing beef. What they're doing is they're going to quadruple this tariff rate quota, which means they're going to allow 4 times the beef to come in to the United States with little to no tariff, essentially. So it's going to essentially open the door to those imports, but it's not the U.S. government importing beef. Mackenzie, what are your thoughts?
I think the concerning thing about this situation, obviously this beef coming from Argentina, it's not going to be enough to move the needle when it comes to beef prices. So is the Trump administration possibly going to go to other countries then to also import more beef? I think that's part of the reason why we've seen the market react the way that it has. And I know that's pure speculation, but if he wants to lower beef prices, he might have that thought that if he just continues to ramp up more beef imports, that might bring down beef prices. But for the record, an increase in imports does not directly correlate with lower beef prices. Over the last 10 years, beef imports have increased by nearly 80%, while beef prices have also increased by roughly 20%. So there is not a correlation between the two.
Matthew, what are the odds that this headline, sends the cattle market lower, which it has to some degree, but it does absolutely nothing to fix beef prices?
Yeah, I don't know that it does a lot. I mean, the thing is, as Kenzie said, I mean, I did a lot of work on this yesterday, just trying to prepare for some stuff over the weekend. But as she said, I mean, you're looking at 1%. I mean, it's not a massive increase. I think a couple of things come to mind, though. The funds have been long cattle for quite some time, and so if you're a fund and you're sitting here saying, just one post, one tweet, True Social, whatever it was. I mean, it's True Social post, but if one post can impact the market like it does, it makes you just a little bit hesitant, in my opinion, to hold on to those particular positions. I think that is problematic. I mean, overall, I don't think that you're going to fundamentally change this cattle situation much at all. I think a bigger impact, yesterday I saw, or overnight, whatever it was, that we're going to talk, Brooke Rollins is going to talk to Mexico about potentially opening the border. I don't see it happening right away. But if you do that, I think that it's certainly going to make a little bit bigger impact than, for instance, bringing in another less than 1% as far as imports concerned. I think, as far as the market impact, what it did is it just created uncertainty. And any time that you are able to create that much uncertainty with a post, I think that it certainly makes the investor a little bit wary.
Yeah, if you're a big fund and you see that Trump post, it's just get me the F out. That's what's going on right now. Let's go to the Mexico story.
So Mexico's ag minister will meet with the U.S. With U.S. Ag Secretary Brooke Rollins in Washington next week to discuss reopening the border to Mexican feeder cattle imports. The border has been closed since May due to an ongoing outbreak of New World screwworm down in Mexico. In late September, the parasite was detected just 70 miles south of the border, indicating that containment efforts have not been successful. The suspension of imports, of course, has significantly affected the nation's feeder cattle supply, contributing to the rally in cattle prices. Feedlots are estimated to have placed roughly 500,000 fewer cattle on feed over the last 3 months compared to last year, largely due to the absence of Mexican feeder cattle.
Mackenzie, is this potentially the bigger story of the two cattle stories we're doing today, much bigger than the beef import story?
I would say so. My goodness, this could really send the markets crumbling, in my opinion. And I think I don't know how we're already, which we aren't necessarily talking about it. They're just going to have a discussion, but I don't know how they could be anywhere close to reopening the border.
Matthew, thoughts?
Yeah, I mean, I think that it's nonsense in my opinion. Whenever we're looking at just we're less than a month away from this being found, an hour's drive, from the border, and so I think that it would be crazy until we feel like we've got a much better handle on the situation, to start this process. And I would think that the administration would know that, but at the same time, if they're wanting to bring beef prices lower. Oh, good Lord. I mean, is the decision going to be made due to that? I mean, and I sure hope not. But by all means, nothing would surprise me right now.
I threw in a couple of long-term cattle charts just for some context. I think we're still higher for the month for October in live cattle. And this has been a multi-year bull market, of course, feeder cattle, exactly the same. So it's not over yet. It's just things have gotten a little bit more uncertain, I guess. Let's go to the drought monitor.
Drought conditions were mostly unchanged across the Corn Belt last week. Substantial rainfall in southern and western Kentucky, along with southern Illinois, led to an improvement in conditions. Meanwhile, a lack of precipitation led to worsening drought in northeast Iowa and eastern Illinois. Across the High Plains, conditions were also mostly steady, with improvements here in central Nebraska, but deterioration in eastern Kansas, central Oklahoma, and northeast Nebraska. When we look at the percentage of U.S. areas experiencing drought, corn country, 32%, soybeans, 39%, winter wheat, 43%, spring wheat, 16%, and cattle country, 27%.
Got a good graphic from our friends at Crop Profit. We've got quite a bit of abnormally dry to moderate drought across corn and soybean areas, which is not necessarily a big deal this time of year. There has been some rain in the Ohio River Valley, in some areas of the Mississippi River Valley, but the river levels are still low. Matt, the recent rains, have they had any impact on harvest activity? I think they've helped the river levels a little bit.
Yeah, I mean, they help the river levels a little, but whenever the ground is as dry as what we were at, in the Mississippi and Ohio River valleys, most of that rain didn't make it to any tributaries, didn't make it to to the river to speak of. I mean, we were looking at around 2 inches in our part of the world. Previous to that, we'd gone 3 months with less than an inch of rain, and so essentially, we really didn't impact harvest, but for maybe 24, 48 hours. In all honesty, that rain came in Friday night into Saturday. There was people that were farming, harvesting, working ground even on Monday. And so basically all you did is you filled in those 2 inch, 1 2 inch gaps in the ground, and I mean, it was a little greasy on top for a day or so, but by all means, there needs to be some serious follow-up moisture. But it certainly did a couple of different things in our part of the world in South. I think it definitely helps some of these guys have been sowing wheat here lately. I mean, you're going to get good stands there. I mean, bottom line, a little bit of moisture goes a long way, but we got a long ways to go to get out of drought.
Mackenzie cattle got beat up yesterday.
They sure did. Live cattle, it wasn't terrible. Live cattle, they were 27 cents lower to $1.35 higher. Feeders, on the other hand, they suffered losses ranging from $1.72 lower down to $4.82.
Guys, have a wonderful weekend. Matt Bennett, thank you for joining us. Have fun on Market to Market, by the way. Matt will be on
Thanks,
the
bud.
big show this weekend. We'll be back on Monday.